The jobs report boosts gold. Oil is looking flat. I'm Joe Deaux at the NYMEX today. Here's what's happening in commodities. Oil prices are hovering around about $100 a barrel, as we're seeing most traders are still recuperating from yesterday's inventory build, but we're also looking to another EIA petroleum status coming out tomorrow, which expects another build of 2.7 million barrels in crude oil. And we should also turn to gold. We saw gold pop way off the flat line as the jobs report came out. Jobs report came out at 148,000 jobs added. The unemployment rate dipped down to 7.2%. We were expecting nothing to change, 7.3% on 180,000 jobs, so a little miss. I was talking earlier to Brian Jacobson. He is a portfolio strategist over at Wells Fargo Advantage Funds. He said that this suggests, at least in his opinion, that we won't get a taper at least until March, which might be why we're seeing gold come off those flat line. Here to talk about that with me today is Paul Sachs. He is the principal gold trader at Aurum Options Strategies. Paul, thanks so much for being here. Let's jump right to it. What are you seeing with the gold trade?
Yeah, I mean, there's been a dearth of data lately. So this data point we got today, as you pointed out, a miss, well below expectations in terms of new jobs created. Really, it's like our first meal after a hunger strike. So people are really overreacting, in my opinion, to it. Look, there's a chorus of Fed officials now basically saying there's going to be no chance of tapering, or unlikely to say the least, until March, June of next year. So what does a poor economic data point from September mean? Not very much, in my opinion, but you know, it looks like the market was heavily shorted. There's a chorus of shorts out there in terms of the major banks looking for 1,300 year end this year, maybe 1,050, 1,100 by end of 2014. So you have a perfect storm and you get a nice pop.
One data point out of a number of data points, and we get another one of these jobs reports in 2 weeks. So essentially what you're saying to even retail investors is maybe don't get too excited, at least in the gold space, that we saw this pop off up about $15 right initially on the report.
Yeah, well, more important from my perspective is the physical demand that appeared in the gold market around 1251 last week on the lows. You know, GOFO rates went negative, the EFP showed you there's real physical demand, and it came in this time at 1250, whereas last time down it came in at 1180, 1200. So that is a fundamental and important analysis. That means there's some real support here and there's a reason to get long. But there is some economic headwinds, recovering economic global economy, and the likelihood of eventual tapering. So it's hard to just say I'm getting long gold and not looking at it.
So you're still seeing some bottom line support at 1250.
Yeah, I mean, I'm long gold. I would add to my position and then have to possibly think about getting out if we broke 1250. Most certainly if we broke 1200. We're talking about a big range, very difficult to trade. But the market is short. Most participants are looking lower. So any data points like this, any fundamental news that comes out, you really get a nice trading chance here for some rallies.
All right. Well, that's Paul Sachs. He's an options strategist over at Aurum Options Strategies. That's his take right now. We'll be focusing on the gold trade. Maybe don't get too ahead of yourself. For the Street of the NYMEX, I'm Joe Deaux.